Creating a professional-level stock portfolio doesn't require insider knowledge or a finance degree. With the right strategies and tools, anyone can build a portfolio that maximizes returns and minimizes risk. Follow these steps to start investing like a pro. 1. Define your investment goals. The first step in building any portfolio is understanding why you're investing. Are you saving for retirement, a down payment, or financial independence? Action. Write down clear goals and their timelines. Short-term goals, 1 to 3 years, may require conservative investments, while long-term goals, 10+ years, allow for higher risk. 2. Understand your risk tolerance. Investing involves risk, but understanding your risk tolerance helps you build a portfolio you can stick with. Action. Assess your comfort with market fluctuations using tools like risk tolerance questionnaires. Younger investors can generally afford to take more risks. 3. Diversify across asset classes. A professional portfolio spreads investments across different asset classes to reduce risk. This includes stocks, bonds, real estate, and even cash. Action. Allocate percentages based on your risk tolerance, e.g., 70% stocks, 20% bonds, 10% cash. Adjust as needed based on age or market conditions. 4. Choose the right mix of stocks. Diversify within your stock holdings by investing in different sectors, industries, and geographies. Action. Include a mix of large-cap stocks for stability, e.g., Apple, Microsoft. Mid-cap and small-cap stocks for growth potential. International stocks for exposure to global markets. 5. Use ETFs and index funds. ETFs and index funds offer instant diversification and lower fees than individual stock picking. They're ideal for beginners and pros alike. Action. Start with funds tracking the S&P 500, NASDAQ, or total market indices. Choose low-cost options with expense ratios below 0.2%. 6. Research individual stocks. If you're ready to invest in individual stocks, focus on quality companies with strong fundamentals. Action. Analyze key metrics like P/E ratio, revenue growth, and debt levels. Invest in companies you understand and believe in. 7. Monitor and rebalance regularly. Over time, market fluctuations can shift your portfolio's balance. Rebalancing ensures your investments align with your goals. Action. Review your portfolio quarterly or annually. Sell overperforming assets and reinvest in underperforming areas to maintain your target allocation. 8. Minimize fees and taxes. High fees and taxes erode your returns, so keep them as low as possible. Action. Use tax-advantaged accounts like IRAs or 401ks. Opt for commission-free trading platforms and low-expense funds. 9. Stay consistent and patient. Building a portfolio takes time. Market volatility is inevitable, but sticking to your strategy ensures long-term success. Action. Invest consistently through dollar-cost averaging, contributing a fixed amount regularly regardless of market conditions. 10. Keep learning. Professional investors continually educate themselves to stay ahead. Action. Follow market news, read investment books, and consider seeking advice from financial advisors or mentors. Building a stock portfolio like a pro is about strategy, discipline, and knowledge. Focus on diversification, minimize fees, and stay patient. Start small, and over time, you'll grow a portfolio that reflects your goals and sets you on the path to financial success.